Welcome to the world of Lurnex. Today we're stepping inside best practice and I'm joined by Robert Groves from Hazlewoods. So Rob, you're an accountant at Hazlewoods and you're a veterinary specialist. So tell us about how you got into accounting and why you've ended up in the veterinary industry.
Hi everyone. Rob Groves at Hazlewoods, as Andy said. I didn't start off as a child going, I'm going to be an accountant. I imagine there's quite a few vets when you were younger. You knew you were going to be a vet from the age of 5 or something. I have always liked maths, numbers, problem solving, but my original career ambition, I just thought, I wanted to be an electrician. I didn't know why. Young teenager, and then found out I was colorblind. Not black and white, obviously. Colorblind, and electrician's off the table. Thankfully, you don't want me working in your house on your electrics. So I did maths and economics at A level, and I think speaking to people whilst I was thinking about careers, university, etc., just decided that accountancy seemed to fit what I liked in my type of personality. I didn't go to university. I actually took a year out, worked abroad for a bit, and came back and got a job at Hazlewoods doing AAT. So I went through the apprenticeship route, AAT qualified, then through ACCA. And it was with Hazlewoods where we've got the different specialisms that I was in the veterinary team and focused on veterinary from there. And I think probably the question is, why have I stayed in veterinary? Because I've been in veterinary now for 15 years, and it's just the range of people and the type of work. None of the work's the same. You might be doing a set of accounts, yes, but it's not the same for every practice. It might be the same process, but it's different people, different objectives. And that's what's kept me in the veterinary specialism and will keep me in it.
Amazing. Interesting story from electrician to accounting. It's quite a switch, you might say, in some ways. So I'm going to be honest with you, Robert. I'm the son of an accountant, so there's a little bit of childhood trauma in there. I learned spreadsheets from a very young age. I was maybe too young to be dabbling with, spreadsheets, but people can find accountants a little bit intimidating, not because you're not nice people, but because there's a lot of stress around money. There's a lot of challenges around things like getting your numbers in a row. So what advice would you give to people who are a little bit scared of their accountants?
Just speak to them. We shouldn't be intimidating. I know you might think accountants can be, but what we are here for is really to explain the jargon, cut through anything you don't understand, and help you through the process. I think sometimes accountants might get confused with the tax man, because you say, oh, I'm an accountant now, you're going to make me pay tax. Yes, we should be advising you on what tax is payable and hopefully how to mitigate tax as best as possible, but we're not the tax man. So I think sometimes there's that crossover. And in relation to the financials, we do like a spreadsheet, but it's our job to do the spreadsheet and then explain it to you in as plain English as possible to bring you along with us. So I think the advice on that is just talk to us.
You're new to the veterinary world. Maybe you're starting up your first practice, maybe training, you've recently graduated, thinking about maybe owning a practice in the future. What does an accountant do? Let's start with the basics. What does an accountant do to help someone running a veterinary practice?
So depending on the stage you're at, if you're looking to start up, we should be helping you through the initial phases, projections, budget, business plan review, explaining everything I just said in terms of what's a profit and loss. People might come into the veterinary looking for a startup and they've never looked at a set of financials. So we should be there at the start to hold your hand, explain what's required, and talk you through, like I said, in as plain English as possible, what the different sets of financials are. We don't want you to be an accountant, but it's always nice for someone not to just dismiss you and say you don't need to understand that, to try and take you along the journey as well. And then it would be letting you know what you need to do: VAT, payroll, PAYE, corporation tax, personal tax, because if you've always been employed, you're now suddenly self-employed, you've got to do a personal tax return. So that's the early stages. And then through maturity, your accountant should be advising you tax planning, what's the best route in terms of how you want to remunerate yourself, what are your goals in terms of the future, and just supporting you through that and helping you grow. You will inevitably come to your accountant with questions around prices, inflation, staffing, how to buy equipment. Is it more tax efficient to buy with cash or hire purchase or lease? They're becoming more prevalent, especially around electric vehicles, and all the way through to succession planning in terms of what are you looking to do in the future. And throughout that, whether you're using your accountant for VAT and payroll, which are touch points throughout the year, or you are just using your accountant for accounts, corporation tax, personal tax, which are more annual pieces of work or touch points. I come back to what I just said on the last question is reach out, speak to your accountant, and if you've got questions, just ask them.
Absolutely. Well, there's a wide range of things that, as you say, people need at different stages with their practices. So, but let's go back to vet school. So vets train to be vets and clinicians, but then you do end up with a lot of people becoming partners, maybe buying into a practice or perhaps starting up their own practices. Do you think there's a big gap in terms of knowledge and understanding from what people learn at vet school to what they need to know in terms of running a business?
I think there is a gap, and there's inevitably going to be. Vet training and vets learn clinical excellence in terms of veterinary and customer care and what's best for the pet and the owners. It is not focused on business and running your own business. Arguably, perhaps it should have some more focus on that. But I think for me, the gap ranges and it all comes down to personality types. There's people that always want to be in all the detail. They've known they've wanted to be a practice owner for a very long time. So they maybe looked into finances and understand that a bit more when they come to perhaps wanting to be a business owner. And there are vets that have decided that there's either not progression for them where they are, or they just want to control and run their own business and do it their way rather than the way it's being done at the practice. And if you've taken that leap in a short period of time, then you can have a wider gap.
So if you had a magic wand and could improve financial literacy across the sector, what's one thing that you would love to see improve just to help you in your work with helping practices?
That's a good question. I think it would be understanding a profit and loss account. So revenue, expenditure, it really helps if you can just understand the difference between revenue and day-to-day expenditure and capital expenditure. So your equipment that you're buying, that's a huge help. And also just what drives profitability. Profitability doesn't always guarantee cash. And I keep saying cash because cash is important, but it really helps if you understand what costs are impacting your bottom line and what is helping you generate turnover, because that's what drives the profit, and then everything else falls in after it. So I'd say understanding a profit and loss account.
Are there any other measures you think that people really need to be doing each month? What other metrics should be tracked and should be considered on a monthly basis? Annual reports will tell you what tax is due, and your quarterly VAT, what you've got to pay. But what should practices be measuring on a month to month basis?
Month to month turnover, I would say you should almost always know what your turnover is for two reasons. And is it comparable to last month? Is it comparable to last year? So are we on track to either maintain what we were previously doing, or are we growing as we expected? That would be for a mature business. Or if you're a new startup, then it's really knowing what you've got in the books in terms of client bookings and what's coming up. So you know how fast you're growing, because you will be growing as a new startup, and growth determines staff. And so I'd say on the next one, then it's staff costs. Equipment is an investment, but probably the biggest investment within a practice and the most important part of a practice are the staff, are the people. They are the ones that are client facing. It tends to be where we work with all independent practices. We're not usually seeing overstaffed. It's everybody's working really hard. So it's understanding what your investment in staff is. Are you getting the turnover required out of it? And then we look really busy. Are my staff costs moving up? Not exactly in line with our output, with our turnover, but perhaps do we need to start recruiting more? So I'd say staff costs. And then I've mentioned it already, and it's cash. Cash, though, I wouldn't be waiting till the end of the month to look at cash. Banking's online now, well, everything's online, but you can just pop on daily, weekly, just keep an eye on cash. That should hopefully, I'd say with those three, everything else, I mentioned profit, but your key costs, you've got purchases, staff, and that's what generates the cash for you. And that will help you mentioned VAT. Yes, those things are quarterly, but they come along in quarterly chunks. So you'll know you've got enough cash saved up for the VAT bill each quarter. Perhaps you save that in a separate deposit account or something, but they would be the three things: turnover, staff costs, and cash flow.
Brilliant. Now, it's really concise. It's really helpful. There are so many numbers and metrics people can track. It's good to think about, I guess, what are the key things, what are your growth metrics and key metrics, and then what are things you need to keep an eye on in a bit of a hierarchy, I guess. So you've been in the industry 15 years, you say, Rob. So things have changed quite considerably in terms of the market, corporatization. Give us your thoughts on how the market's changed and also how you see it changing in the future. Is it going to be a growth in corporates, a growth in independence? Is it going to be new models? Give us your take on how the world of veterinary's changed and changing.
Yeah. So when I came into the veterinary sector as an accountant training, the corporatization wasn't as much as it is now. I think we're at about 60% corporatization now, but we kind of went through the boom of corporates offering very good prices, and that was the right succession route for a lot of independents at the time. That has perhaps led to where I mentioned earlier there might not be some opportunities for succession because they might be working within a corporate. So I think that's led to a lot of new startups, a lot more independents opening up new practices. Whether corporatization, people will have their opinion on it. I don't think it's all bad. What they've done in relation to salaries, people might think they've pushed up salaries, but vets, nurses, people in veterinary, they train for a long time, and I think probably salaries now are where they should be. And corporates were a big part of getting salaries there. But then equally, there has been some negative output, especially with the recent CMA review, and that's in the press. But that's brought more attention onto corporates, and people are wanting to support more independent practices. So there's huge scope for independence, whether we'll see more smaller independents, so 2-3 owners, maybe, rather than your 5-6 owners, large practices. I think we might see that. Corporates, they're not going anywhere. They will continue to drive investment. And I think in terms of moving things forward, perhaps with equipment or AI, they will do that first because they've got the capital. So that will hopefully come down and allow access to independent practices that maybe are more risk averse about picking that up first. Probably you will see smaller groups, so not a large corporate buyer, but just larger independent groups where they can go around and buy up other independents, or maybe you do a joint venture type thing. So it's changed massively in the 15 years. Some of it, I think, been right for the veterinary profession, and we'll move it forward, and it's created opportunities for independents. Now there's definitely scope to keep growing. There's huge scope at the moment, especially with people wanting to support local where they can.
So it sounds like there's changes, there's opportunities, but is the market a bit overcrowded? Is competition becoming a huge problem for practices?
There is more competition, but I don't think it's not overcrowded. We're working with lots of new startups, and touch wood, they're all very successful. We work with a lot of mature existing practices, and they're all successful. How you define success is different. Some people view that as profitability. Some people view that as being able to dictate their own work-life balance, or some people dictate that as a really nice place to work. Success isn't all about finances, isn't all about cash, and I think that's an important point to make. So competition is more, but it just means the service levels need to be higher or as expected. And that might be where smaller practices with a closer knit team, or the independent owner-driven practices are excelling in the client service, and people will always have pets, so the competition might increase, but it just means service levels need to stay high.
So I've spoken with a few practice owners recently who've seen growth over previous years, and they've got to a point where it kind of feels now like things have plateaued. Things are a little bit stuck, and they're a bit confused. Things have grown historically, but they're not growing now. What are some of the financial signals or even warning signs that might sit underneath a plateau?
So I suppose financial signals would be flat turnover or turnover growth just by price, as in you've put your fees up because staff salaries have gone up, but the volumes are flat. So flat turnover would be an indication, whether that's the same bookings each month or less. If you're fully booked and you've got your books closed, then there's always scope. So flat turnover, maybe an increase in costs, so rising costs and a reduction in some of the profit margins. And that might be through, where you said you've plateaued, it might be you've been so busy growing that some of the renegotiating, refixing contracts has gone by the wayside. So you might have plateaued in terms of what you can bring in, but now you've got time to hopefully resource the team properly and look at those costs. And I suppose productivity, everyone instinctively knows whether they're busy in a practice. They can say, yeah, the staff are very busy, or no, we feel about as busy as we were last month. So there's financials, but I think before you see the financials, you will have a gut feel of just around the practice, people coming in and just how the staff are interacting on a day-to-day basis.
So for other practices, they're looking at expansion. What ways can someone go from one site to growth? What are some of the different shapes and models that you've seen across the sector, Rob?
Yeah, so in terms of expansion, there's opening a new practice. So not moving from the one you've got, but opening maybe another branch. So that is quite a very popular option. You've exhausted the space, the capacity, you've got your existing practice, perhaps you're renting, or that you can't extend, so you can't create any more space. So you open a new practice. Very good way, because you've got an existing brand, and doing that in support with your accountant and your team, your key leadership team within the practice, you will have identified where there's a need and where there is potential scope for picking up new clients. That's probably one of the most popular. I slightly touched on it then. If you can expand the practice you've got, if you own it, then great, you're investing in your own property. That comes with its own challenges. How are you going to finance that? Is it existing cash? Is it a loan? You probably need to think about how much is it going to disrupt existing trade in terms of where's the work going to be done? Is it out the back? So actually it doesn't affect any of the customers coming in. It doesn't affect any of your staff, or is it front of house and therefore you need to set up a porta cabin in the car park or something so that you maintain what you've already got. And then there's perhaps partnering with other practices or coming up with new ideas. Do you bring out of hours back in house? Have you got the capacity to do that? That seems to be a really popular thing at the moment. A lot of clients are wanting to offer that whole service. And it comes down to the client care point. If they can do it, then a lot of our clients do. Just because then you're not moving clients at the end of the day. It's the same continuity of care, and it's that client care point. But I would probably just say, if you are looking to expand in any way, have that discussion internally. If you're a single owner, have I got a friend who's a business owner that's expanded? Can I speak to my accountant? And what ideas have they got, and how do they think it would work, and how would we make it viable?
Absolutely. Getting a board of counsel in some way is always a good thing to do. When it comes to borrowing, you mentioned, expanding through perhaps finance. Debt can be quite a scary thing, particularly when there's so much uncertainty around the CMAs, the industry, what's happening with global politics, AI, all these kind of things. How do you advise people when it comes to debt and borrowing in terms of not just the financial and practical application, but also the emotional side of it? Because it's a really big challenge for many veterinary practice owners.
debt can be scary, but I think if you use debt and borrowing for the right reasons, and that I would say is for investment in growth opportunities, then it could be a really powerful tool. Banks are there to lend for a reason. Their reason is to make profit, obviously. Our reason is to facilitate growth. If you're using debt for those reasons and you've costed it out, it's probably a good decision. If you're using debt, borrowing, financing for day-to-day, month-to-month expenses, then that might be where you're starting to look at, do we need to be reducing some costs? Are we, in a personal term, are we living beyond our means for some reason because we're always in our overdraft, or we're always needing £10,000 of credit card debt every month? So I think debt as a business owner is a similar concept to debt as an individual. You would take debt out for big purchases, buying a house, whereas, like I said, if you are having to use credit cards, they've got their place, they've got their need and their useful tools, as an example. But if you're using those for day-to-day expenses and you're leaning on them, then that might say you need a conversation, probably with your accountant, to look at how you can restructure finances and what you can do to get back onto a good turn.
So when it comes to planning succession, let's imagine that I'm a practice owner in my 30s. I'm just starting out. When should I start thinking about succession in terms of bringing other people in or selling? How long does it take as well to go from, sole owner to having partners on board or having a buyer? When should people start thinking about that process, Rob?
Yeah, I don't think there's too early of a time to be thinking about succession. I've had the conversation with somebody and they asked me, when should I start thinking about what I need in retirement? I said, in that case, work backwards. So think about when you might want to retire, just when you might want to exit your practice, when you might want to bring in new partners, and work backwards from that. You probably want a minimum of 5 years. So if you're thinking about it, 5 years is a minimum to start having the discussion. You might not actively do anything, but anything longer, if it's on the radar, if it's in your mind, I wouldn't say make decisions now thinking about 20 years time, or structure your business now because of what you're going to do in 15 years, because tax changes annually a lot at the moment. So if you're thinking of putting a structure in place because you're going to do something in 10 years time and it's going to incur significant cost, you might want to defer that significant cost until closer, but at least you're already thinking about it. And bringing in new partners, it's always best to just start thinking about that before you need to bring them in. The last thing you want is not having had that discussion with a key employee. Either they're really good with the staff, they're a key income generator, or they've always got good ideas in ways to grow the practice. So you want them in the practice. You probably don't want to just turn around one day and say to them, do you want to be a partner? Do you want to buy in? You might want to stage that for them and have those discussions with them, because they might not have thought about it. They might have always been thinking about it. But I think the earlier you can start kind of monologuing that in your own head helps you when you come to have those discussions. And it also helps to manage expectations, because somebody might want to be a partner. You've never had a discussion. It's not, say, on an annual review, you don't ask about career objectives, which I would recommend if it's not on annual reviews. Just ask people and they might leave. Whereas if you start thinking about it earlier, then you can start having those active conversations. So 5 years is a minimum, and anything above that, great. And if your planned exit is maybe not internal, not to an existing staff member, and you're not going to stay on, so you might then want to look at what you're doing to maximize the value of the practice, as well as ensuring sustainability and keeping the clinical excellence that you've already developed.
And when do people start looking at valuations then, Robert? That's something obviously very complicated. How do you judge the value of a business? And when should people be speaking to someone like yourself at Hazlewoods about getting valuations?
Yeah, I would definitely speak to someone externally about valuations, whether that is your existing accountant, whether they can help you with that, or whether it is a specialist. So we work purely with independent practice. We help them on valuations, on buy-ins, and that's for our existing clients. But we also help with independent valuations for other practices where perhaps they they want to show the person buying in they've gone off and got a valuation from a veterinary specialist accountant in this is a reasonable price. And when you're getting a valuation, always take into account affordability for the individual, because you might have a price in mind, but when it comes to what they can afford to borrow and what they can afford to repay, it might not actually be viable for them. So there might need to be some way of structuring that. Do they go out and borrow so much from the bank, and then perhaps you lend them some as well, so they kind of pay the bank back and you back at the same time? But you always want to look at value. I would get someone external that's done veterinary valuations, and then affordability with that.
Amazing. Rob, thank you so much for joining me today. If people are interested to speak with yourself or the team at Hazlewoods, what can they expect from an initial conversation with you?
Initially, it will just be a meeting just to get to know you. I've mentioned success in terms of people have got different ideas of success. People want different things from their accountant, and it's really important that you do speak to somebody that you're trying to work with, and it should be a relationship and support both ways in terms of what's required. That initial meeting would just be getting to know you, getting to know your practice. What are you looking for? And if you are looking to change accountants, then why? What's maybe not gone so well? What have they done really well? Or are you just looking for something new? So are you looking for the ability to project? Do you want more tax planning? And what's really important to you in terms of service in key offerings? That would be an initial discussion as a new startup. It really ranges. Some people need talking through the whole process, and we're very happy to do that with you. Other people come to us and say, we found the property, we've done a business plan, we've already started talking to solicitors and people on finance. We now need some projections to go with all of that. What do you offer? So the initial meeting is just a get to know you and what you want, so that we can tailor what is offered to meet your needs, not just a one size fits all service.
Amazing. And people don't need to be scared because you're very approachable, Robert. So thank you so much for joining today. For everyone who's watching and listening and part of the Best Practice Summit, please do head on over to the Lurnex platform. We have some reflection questions for you to answer, and that will give you the ability to get your attendance certificate as well. So thanks so much, Robert Groves from Hazlewoods, for joining today. Thanks, Robert.